Good morning. We'll get started. My name is Greg McCoach, editor of the Mining Speculator. Glad everybody can be here for the May Metals Investor Forum, always one of my favorite conferences. I was just at a money show. I've been doing some of the money shows these past couple of years, and they've been fun as well. There's definitely a pickup in interest in gold. So today, I'm going to take a little different slant than I normally do. I'm going to talk about lessons I've learned in the junior mining shares over a 38-year period of time as an individual investor in the space, and the last 19 of which as a newsletter writer. And with a talk of only 20 minutes, I listed about 32 lessons that I had learned, and I decided I could only, for time's sake, I had to pick 12 that I could address that I felt were most appropriate for this period of time that we're in. And I remember a lesson I learned early on when I got started around 2000. The bull market really started to kick in gold around 2002, and that nice run we had from 2002 to 2007 was a glorious period for us where we made lots of money. And I remember I was down in San Diego, and Rick Rule had his global resource office down there. And I called Rick up to see if he wanted to grab lunch, and he said, yeah, well, just come by my office. So I remember going in Rick's office, and he was on the phone. He said, wave me in. He just said, come in, sit down, right across from him at his desk. And as I was sitting there looking, I looked around his desk, and he had all these mining pictures, all haphazardly clustered all around his desk. It kind of looked funny. And he said to me, and I said to him, what are all these? He says, oh, those are my mistakes. I want them firmly planted in front of my face at all times. And if you're in this space, you're going to make mistakes. There's no way around it. I learned that my position as a newsletter writer is really an idea guy. Do the due diligence, do the research so you can give your subscribers the best chance at exploration success. And that's what I've tried to do. So lesson number one, and I put this one as number one. The rest of them aren't in any order, but this one is appropriate to what we're dealing with right now. We're in a very tough market. We've been in a tough market. We've been in a bear market for basically 7, 8 years now, and we keep looking for the catalysts that are going to pull us out of this, and they appear like they're right on the horizon, but they just haven't happened yet. And we need something to happen to bring speculative monies back to this sector. And I've recently said that the best time I've ever had in this space was that 2002 to 2007 period. We were hitting it out of the park back then. And a lot of people don't realize that only 30% of the money coming into that sector was retail. 70% of it was the big funds who were writing huge checks. I remember being at one PDAC, and one of the fund managers came up to me, or actually called me ahead of time and said, Greg, can we have a meeting? We're here to spend $100 million. We want to write a check to 20 companies for $5 million apiece. Can you help us pick some of these companies, right? Well, that was what it was like. Well, that's totally absent right now. We haven't seen that in so long, right? But anyway, no matter how bad, lesson number one, no matter how bad or good any market is at any given moment in time, bear markets will follow bull markets, and bull markets will follow bear markets. It always happens, it always has, it always will. So despite the fact that we're in that despair again, rivaling the December 2015 lows, I'm here to tell you that a bull market is going to ensue. And in our current bear market situation within the junior mining shares, I believe the intensity and duration of this long-term bear market we've been enduring and experiencing will be eclipsed in intensity and duration in the upcoming bull market. And I believe, in other words, I believe we are about to witness the biggest bull market in junior mining shares within our lifetimes. So there's real opportunity here, but the bull wants to shake off its back as many investors as possible. It wants to take as few of us as possible. And you really have to be a diehard, and the fact that you're here at this conference tells me you are of such character. I think you're going to be rewarded. Lesson number two, no matter how bleak any exploration story is at any given moment in time, one drill hole can change the night to day. And there's many examples of this in my career, but the one that was most, it just was really a fun one and difficult also for me, but West Timmins Mining, I had recommended it at, I think it was 12 to 15 cents. And I covered the story for like 5 years, and the stock barely moved. And they put all kinds of money into the ground, and you know, it had the right people, it was the right location, it was high grade, it was in there, you know, everything, checked all the boxes, right? But nothing ever happened. So the market went south, and they only had like $500,000 left. And so the CEO decided, well, we haven't drilled deep yet, let's just go for broke. One drill hole cost 500 grand with assays. They just decided to give it a shot. Well, it came back, it hit, and less than a year later, the stock sold for $4.20, became Lakeshore Gold, and got bought out. So the bad side of that from my perspective was, after 5 years of following it, I was getting a lot of heat from everybody. Greg, why are you still following this? It's done nothing, right? And so I succumbed to the pressure, and I decided to remove it. Well, 4 months later, they hit this hole, right? You never know. You just never know. Lesson number 3. There is no such thing as a sure thing. No matter how good any story is at any moment in time, things happen that can't possibly be predicted to upset the apple cart. One of my greatest examples of this was Acadian Gold. Actually, I saw this CEO of Acadian back then. He was here at the show yesterday. Will Felderhoff, are you in the audience, Will? I guess not. Anyway, Acadian, I recommended it at 10 cents. It went to $1.20. I told people to take profits, to take at least half your share, sell half your shares or more, take profit, right? So what happened was Buckens Rivers was a lead zinc mill that was owned by Hudbay, and they wanted to get rid of it, and they sold it to Acadian for $5 million. And this was a great coup for the company, because they were going to use the profits to build their gold mine, which already had all the underground adits built, and all they needed was a central processing facility, and the profits from this could easily get this into production. So it looked like a slam dunk, and everything was going fine. Lead and zinc prices went to $1.50, $2. The company was raking in the dough. We were getting really excited. The stock was going up, and then there was a 100-year rain event, which flooded all the tailings ponds, shut them down cold, couldn't produce for 8 months. So instead of making money, they were spending money, all the money they just made, to remediate the problem. And by the time they came out of that 8-month period and were just ramping it up, 2008 hit, and they never recovered. And it went bankrupt, basically. And it was my number one stock. Subscribers had made money on it because we had taken profits along the way, but I was so sure that was going to go, and it just didn't happen. Lesson number 4, junior mining markets evolve, okay? I see investors make this mistake a lot. And you know, what worked in one cycle doesn't necessarily work in the next. Example of our current market, where the status quo of what made us money in the past is no longer working. It's just not working, okay? What is working? Where are the big companies putting the money in behind juniors? What juniors are getting the support of the big majors? Those are the companies you want to look at, because they're basically setting them up with any success to get bought out by that company. So at this point, you must only keep in your portfolio the best of the best of the best. The companies with the highest grades, the best jurisdictions, the best people, the biggest support from the deep pocket partners. These are the companies, and what this means to me, this market has drastically changed. The status quo is no longer there. It's just not available. So this means to me we can reduce the number of stocks in our portfolio. We don't need to cover so many companies. And I think, you know, we can boil this down to just a shorter list, and I think the performance of that list will be much better than buy many of these things and hope for the best, right? I remember Doug Casey, one time we were on a fishing trip after one of the conferences. One of the high net worth investors flew us up to this lake in Saskatchewan to fish for walleye, and I was with Doug in the boat for the one morning, and we were talking, and he said, Greg, he said, I must own 400 of these things. I don't even know which ones I own half the time. And he said, sometimes when a stock has a big drill result, he says, do I own that one? I have to go look. Oh, yeah, I own that one. That's good, or I don't own that one. And he said, I shouldn't admit that, but he said, it's not the way to do this. He said, he got back to what he always talks about, and I always talk about, I agree with him, that, start with 10 stocks and follow the smartest people to fill those slots, the 10 stocks that you like based on what other smart people are saying, and follow that. And some of them are going to win, some of them are going to lose, but you're playing them for the one or two that can go 10x or better. It really doesn't matter what the other ones do. That's how we play this. Lesson number 5. Long, drawn-out bear markets often drain out the upside of really, really good companies due to unexpected shareholder dilution over time. The long permitting and waiting periods to develop a project are killing the upside potential for investors. This bear market has destroyed a lot of good development companies who 7 years ago, as they were getting their development underway, based on the share structure, wow, this is a really good situation when they get it in production and the market's better. But what happens during these long, protracted bear markets, they keep having to raise more money. And the shareholder dilution just makes it, the potential goes boom, 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 boom. And so now I'm seeing a lot of situations that I liked in 2012 that are no longer viable because the upside's maybe 2 or 3x instead of 8 or 10x. Lesson number 6. Markets can remain irrational far longer than investors can remain solvent. That was a quote. It's hard to say who said that. Some people credit John Maynard Keynes, the economist. But there's nowhere that it's verified that he was the one that said that. But we hear it often at conferences, and I think it's particularly true for our junior mining space. And my best friend, he was a social worker and helped troubled teens, young men and young women who were ages 11 to 17. And he had a special gift to help those young people. But he didn't make a lot of money, and he was my best friend since college. And he had a little $25,000 gift thing from a family member, and he came to me and said, hey, can you help me grow this money? And so I did. And this was in the good period, 2003 to 2004. And by 2007, it was $875,000. And I told him to sell it all, pay off your house, pay off any debt, and put a bunch of money in the bank and just wait, because I was worried about the market. We had a little hiccup in summer of 2007. The market bounced back that fall. I said, sell it all, sell it all. I thought he listened. Next April, I find out. He calls me and he says, wow, which one of these things do I sell? None of them have a bid. I got to pay my taxes. I said, well, you should have a lot of money. Didn't you sell when I told you? He said, no. I said, why didn't you sell? He said, I was so close to being a millionaire. I just wanted to wait for it to go up to $1 million, then I was going to sell. Oh, in this market, greed will kill you. And, that was a life-changing event for him. His life since then has been difficult financially, but had he done that, if he had sold, it would have been much better. Lesson number 7, no matter how high any stock within the junior mining space goes, it can often retrace those gains back to or close to its original level. This happens time and time again. You see stocks go up and people go, oh, I wish I could have got in on that one. Well, just wait. Just wait. This market often delivers you the same price, regardless of the news. So it does cycle back, and be careful when buying high. Example of this, my mistake on my part was I got us into Golden Predator multiple times, 12 cents, 32 cents. The stock went to $2.20 several years ago on great drill results up in the Yukon, big new discovery. We made money. I told people to take profits. As it came back down, I was waiting. Oh, it got down just below $1. I thought, oh, this is a good time to buy. Here we sit at 19 cents. A function of the market. again, the stock has retraced from $2.20 all the way back to where we started, basically. So these things happen. Lesson number 8. How well or poorly you do at trading the junior mining shares is mostly a function of 3 things. First, obviously, you need to buy low. And how do you do that? Well, you got to understand the cycles. You got to look at private placement opportunities. Second, how well you manage your cash position. This is where I see a lot of retail investors make a lot of mistakes because they buy and hold, and they're not looking to cash up. And you got to look for every opportunity you can to get your original money back as fast as possible. If you learn to do that, you'll always be cashed up when the market does go to these very low levels, and it really presents an incredible buying opportunity, not just a regular buying opportunity. And third, how disciplined you are in selling to get back your original investment as soon as possible. Again, most people get greedy and they don't sell when they have the chance to get that money back. As long as you get that money back, you're playing with the casino's money and you're in a much better position than most investors. Lesson number 9, the importance of private placements. If you can, private placements give you such an incredible opportunity to leverage yourself over other investors. The law for people who do this, I've seen people make so much money. What they do is they buy all the private placements, they sell the share as soon as they can, and they hold the warrant to see what happens. That way they're paying themselves back as quickly as possible, and they got all this exposure to the upside. If things work out, they still have that upside. Remember that. Sell the share, hold the warrant, get your money back as quickly as possible. My business partner of many years, he's made hundreds and hundreds of millions of dollars in the mining space. He said, Greg, I've made more money on that philosophy than any other principle that I've ever learned in investing. And he's had hits of over 130 million. He made 130 million on Ventana. He just made 30 million, 32 million on Arizona mining. He's had some big ones. Lesson number 10. The importance of getting the answer to the unanswered questions related to any company. As we do the research, guys like John Kaiser, Jay Taylor, any other newsletter writers, we do this research, and we always come across a couple questions we can't quite seem to get the answer to. Well, don't be lazy. Do your due diligence and get the answer before you make the decision. This happened to me with Silvercorp. I was at a conference. I recently was thinking about putting Silvercorp in the newsletter. One of the most prominent people in our industry saw that I was getting ready to do it, and I said, oh, Greg, you don't want to do that. I won't mention his name, but I said, why? He said, they're never going to get the permit. Yeah, it looks great on paper, but they'll never get the permit. So I thought about that. I mean, this is a heavyweight person in my industry. I should listen to this guy. But something told me, let me find out. So I go to the CEO and I say, look, I need to find out the answer to this question. Can you set this up? I'll go over to China. I want to go to the province where the permit is issued, and I want to have dinner with the guy who's going to sign off on this or not sign off on it. So I did. Turned out, had dinner. His wife was there. We had a delightful dinner. At the end, I said, look, I've got a lot of support, a lot of big high net worth investors who are willing to get behind this, but I have to know if they do everything they're supposed to, are they going to get the permit or not? And so the guy takes me by both hands and he looks me straight in the eye and says, Greg, they will get the permit. The only way they don't is if they don't fill out the paperwork. And I knew I could trust him. So I put it as my number one stock. We were in at 65 to 85 cents. The stock 10 months later was 24 bucks. Big win. You got to get the answer. And the person who told me not to do it based his decision on something else. But go find out. Don't trust what other people say. Go, if you have a question you need answered, go find out. Talk to these CEOs, right? Talk to the people that are involved. 11. The best chance the average retail investors have of making big monies within the junior mining sector is to follow a good newsletter writer who does his or her due diligence on exploration companies or solid development plays coming out of a bear market. We have both of these opportunities looking right in front of us right now. There's great opportunity, and we're going to find out about this soon. My last one, lesson 12, funny one. This has worked for 38 years. Every time I've gone to the conferences and all the pretty girls are in the booths, I mean, where every booth has a pretty girl, sell. That's the top of the market. It always is. Thank you for listening.